Hi, welcome to Arthaprabodhini. Do you know how the companies calculate the cost of a product, what they produce? It all starts with something called a cost sheet. Today, we are going to learn about this cost sheet. Before getting into that, let us understand some basic manufacturing process. In this slide, on the left, we can see raw material, some aluminum sheets and some fittings are there. In the middle, you can see the process cutting of raw material and form the raw material to the required shape and assemble the fittings, then inspect the product. After inspection, the final product is ready for sale. Now you might wonder why we are discussing this. Here you need to understand that to manufacture any product, the cost is involved everywhere. The cost can be raw material or can be labor or can be other expenses. It can be direct expenses or it can be indirect expenses. Now the classification of cost we can see in the cost sheet and how the cost of a product is calculated we will also learn in the cost sheet. Now let us understand what is cost sheet and why we need to prepare a cost sheet. A cost sheet is a statement that presents the detailed breakup of total cost of production or service. It shows how the cost is structured across direct material, labor, expenses, overheads, etc. for a particular product, job, or batch. Basically, cost sheet is a statement where you need to put all the costs incurred for the product to know the cost of the product. The objective of cost sheet is to find the cost of product, that is total cost of production and cost per unit of finished product. Cost per unit of finished product will help you to fix the selling price of the product. A cost sheet helps in comparing the cost from one quarter to other. It will also help you to control the cost. It also helps in decision making, like to make the product inside or buy from the outside. In the cost sheet, the total cost is categorized under the following heads, that is prime cost, factory cost, cost of goods sold, and cost of sales. Prime cost means the sum of raw material consumption, direct labor, direct expenses. What is raw material consumption means? Opening stock of raw material, add purchases, less closing stock, then you will get raw material consumption during that production period. Then direct labor means salaries of direct employees, direct expenses, that is job work charges and royalty. Sum of raw material consumed, direct labor, direct expenses is prime cost. Then to the prime cost, if we add production overheads and add opening WAP, then subtract closing WAP, you will get factory cost. What is production overhead means? Indirect consumables, indirect salaries, electricity, maintenance, depreciation of the plant and machinery, rates and taxes, depreciation of the building. These are all factory overheads. If we add this factory overheads to the prime cost and add opening value of semi-finished items, that is opening WIP, and less closing value of semi-finished items, that is closing WIP, you will get factory cost. To the factory cost, if we add administrative overheads, then you will get cost of production. Then if we add opening value of finished products and subtract closing value of finished products, you will get cost of goods sold. What is administrative overhead means? Salaries of office staff, electricity of office, maintenance of office, depreciation of office building, depreciation of the office equipments. These are all administrative overhead expenses. To the factory cost, if we add administrative overheads, you will get cost of production. Then after adjustment of value of opening finished goods and closing finished goods, you will get cost of goods sold. From the cost of goods sold, if we add selling and distribution overhead, you will get cost of sales. Selling and distribution overhead means salaries of sales staff, sales commission, sales promotion expenses, and travel expenses. With all this, you will get cost of sales, and if you add profit to this, you will get sales value. Or if the sales value is already fixed, then sales minus cost of sales, you will get the profit. In this way, in the cost sheet, the cost is distributed under the different categories. Now we'll prepare a cost sheet with the details given in this slide. If you see on the right, the stock is given, stock of raw material, WIP, finished goods, both opening and closing stock, and various expenses incurred during this period is also given here. If you see the first, material purchases, freight inward, and direct labor expenses, royalty paid. These are all comes under the prime cost. Factory manager salary, factory maintenance, rates and taxes factory, miscellaneous factory expenses, electricity factory, depreciation of the plant and machinery, depreciation of the building will come under the factory overheads. Then rates and taxes of office, salaries of office staff, electricity office, depreciation of office building, depreciation of the office equipments will come under administrative overheads. Then sales commission, sales traveling expenses, sales promotion expenses, salaries of sales staff, depreciation of the sales building will come under the selling and distribution expenses. Now in the next slide, we will plot these numbers in a cost sheet. Now we'll see how the cost is calculated in the cost sheet. First with the prime cost. Here the opening stock of raw material, add purchase of raw material, add freight inward, then less closing stock raw material, will get the raw material consumption, then direct labor and direct expenses, that is royalty. Here you got the prime cost. To the prime cost, if we add production overheads, that is indirect labor, factory manager, factory maintenance, rates and taxes, miscellaneous factory expenses, electricity factory, depreciation of plant and machinery, depreciation of the building. These are all factory overheads. If we add to the prime cost, then add opening value of semi-finished, that is WIP, less closing value of semi-finished, that is closing WIP, then you will get factory cost. This is 12,86,350 the factory cost. To this factory cost, here we are calculating the cost of production. That is, to the factory cost, if we add administrative overheads like electricity, office salary, rates and taxes, depreciation of the office building, depreciation of the office equipment, these are all admin overheads. Then you will get the cost of production. Then to the cost of production, if you add opening value of finished goods, deduct closing value of the finished goods, you will get cost of goods sold. To the cost of goods sold, if we add selling and distribution overheads, we will get the cost of sales. That is sale office electricity, salary of sales staff, sales promotion, traveling, sales commission, depreciation of sales building, etc. If you add these are all selling and distribution expenses, you will get the cost of sales, which is here 13,96,220. Now what is the sales value? Sales value for this cost of sales is 16,50,000. Now the difference is the profit, that is sales minus cost of sales is 2,53,780. Here in this way we need to prepare a cost sheet where the cost is plotted onto the different categories: prime cost, factory cost, cost of production and cost of sales. Hope you understood the basic concept of how the cost sheet is prepared. Please continue watching our channel Arthaprabodhini for more videos. Thank you.